Hi class, welcome to this recording. Good evening, good morning, good afternoon, depending on the time of the day you are accessing this recording. A congratulation is in order for arriving at your final destination, which is Learning Unit 7. Learning Unit 7 is quite a short learning unit, straight to the point, and it should take you no time to be able to do your readings. So let's delve straight into the thick of the subject. There are three costing methods that can be used to calculate the cost of product. Those are job costing, process costing, and batch costing. I will leave the rest to you to read so as to see the differences between these concepts. But one thing is important for us today is to look at what job costing is. So a job is a group which is a number of units of similar product that are manufactured as a batch. All right, so it's quite important to understand this concept. One thing is for sure, job, for example, in the job costing and the batch costing. Within the job costing, you have heterogeneous products that are being manufactured in the same facility. And that's why the example of a car manufacturer is quite useful here. But for a batch, we would look at it as the product that are being manufactured are homogeneous. So a toy manufacturer would be an example. As to the job order costing system itself, when we're looking at this group of similar products that are being manufactured as a batch, we need to take into account that the direct labor, the direct material needs to be tracked to the actual value of the product. So that is quite important. So in many respects, this learning unit will discuss many of the concepts we have touched on before, but will culminate in calculations with respect to specific jobs. So we're gonna emphasize on specific jobs rather than the total cost for the firm. Right, so let's go to the steps involved in job costing. And here it's again very important for you students to remember the fact that you have your inputs that are being fed into the production or the manufacturing, and from the production you get your finished goods. So input, processing, and then output. Always keep that in mind. So the first step with regards to job costing, because we are specifically talking about cost, will be the allocation of overhead cost. Direct labor, direct material is easily a given when it comes to many of the questions that you're gonna have to tackle. But when it comes to the overhead cost, as usual, the overhead, it's very difficult to track the overhead directly to the product. So that's where it necessitates a little bit of more in-depth calculations, if I can put it that way. All right, so, but here, as you can see, step one will be the allocation of overhead cost. Obviously, there are various functional areas or department, and the overhead costs need to be allocated to these various function areas and department. With the step two, the primary apportionment of overhead cost, we are looking at the overhead cost that will now be apportioned to the production and service department, to the production and the supporting departments to that production, right? And the secondary apportionment of overhead cost will be the reapportionment. So now we take the cost that we had apportioned to the service department, we are now going to reapportion that cost from the service department to the production department. All right, so I trust that's clear. Step 4, these are just steps and you will do your reading on this. We need to calculate the total for each production department. Remember again, we are dealing with input, we are dealing with production. So when we have the account of work in process, when we are actually doing the actual transformation of the input into the output, it is always very important when you are looking at a manufacturing company to see what are the main departments involved in that production. They are also called the production department. All right. Okay, and this will lead us to step 5, which is the calculation of the overhead absorption rate, right? You've encountered it in the past chapters. It is the same concept, but like we said, here we're more going to focus on the specific jobs, right? We are going to focus more on specific jobs rather than the total cost for the firm. I trust that that is clear, right? So we're going to look at step 5 at the absorption rate for each production department. There are different production departments. There might be a specific absorption rate for each production department. All right. Okay, so now we come to a very important concept here, which the basis or the cost driver, which is a concept you are now familiar with. The basis, the standard basis or cost driver. Because remember again, here what we want to do is that the overheads needs to be absorbed into the cost of the goods that are manufactured and sold. That's the whole purpose of the exercise. We want that overhead cost, we need to be able to absorb it into the cost of the goods that are manufactured and sold. So the basis on which we allocate this overhead is quite an important concept. And here, this learning unit provides you always these examples. And I have to say to the entire class that this is quite a very decent book. I've seen some criticism of the material as though the material is not quite alive, and that's why I provide extra annotation to try to make it simple for you. I can understand that it can be quite overwhelming when you have to deal with a financial module, but I have to say this is quite a very well-written book, right? And like I said, so these are the different sort of bases you could get. For example, the material cost basis. What you would just do all the time, it will always be, your numerator will be the budgeted overheads. There will always be, any company, manufacturing company would have a budgeted overhead. But like we said, we want to find out, so if the cost driver, for example, it's the materials, the direct material that is being bought. So what we're going to do is we're going to take the budgeted overhead divided by the budgeted direct materials, right? And that will provide us a rate, okay? Because we're going to time it by 100, so we're going to get an X percentage of direct material cost. So this could be a way that we apply the allocation, or we allocate the overhead cost, right? So units of production. So if you are told that the unit of production is the basis, what you would need to do is just to take the budgeted overhead, which will be the total amount of overhead that is given to you, and you're going to divide it by the budgeted units of production. All right, very simple. That will give you an X rand amount per unit of production. So in case the basis is the machine hours basis, right? So if they give you the machine hours and they tell you that this is the basis on which we did the allocation of overhead. Simple. You just take the budgeted overhead, you divide it by the budgeted machine hours. Straightforward. That will give you an X rand amount per machine hour. That's what you want to have. It's very important. X rand amount per machine hour. The same would be for direct labor. If they say the basis on which they did the allocation of overhead is the direct labor hours, good. Then you take the budgeted overhead that you've been given, you divide it by the budgeted labor hours. So you need to find how many hours did this job cost. Did this job in particular necessitate? Let's put it that way. So perhaps it was 500 hours. So you're going to take the budgeted overhead divided by that 500 labor hours. That will provide you with an X rand amount per labor hour. Direct labor costs. So when they're providing you a cost, not a unit like hours or unit of production, then you can understand that you're going to be looking for a rate because they're providing a cost, right? You have a budgeted overhead, which is a cost divided by another cost. What you would like to do is multiply now that by 100, which would give you a percentage. And that will be a percentage that is being used to apply the overheads, the manufacturing overhead cost to the actual job, right? So the final step obviously will be to calculate the cost and selling price of the job, right? What is the cost and what is the selling price? When we mean what is the cost, we mean what is the total cost for that specific job, right? So we want to find the total cost. So you would have, again, very important, don't forget those inputs. They have been the same for the past 3 chapters or since even the beginning of this module. We've been talking about direct material. Right now it should be like second nature to you. So we have direct material, direct labor, overhead. Direct material, direct labor, overhead that is applied to that job. Again, we zoom in on the job, the specific job. For this last chapter, keep that in mind, right? So direct material, direct labor, and overheads, that will provide you the total cost of the job, right? So as you can see there for the selling price, again, economics 101. As you see, sometimes you might wonder what's the purpose of all this, but this is just rooted in basic economic and financial principles. We want to know what will be the selling price, because once we have the price and the cost, we will be able to calculate the profits. So as simple as that, right? So there is a markup, for example, here. If there is a markup, you understand that you're looking at the cost plus the markup, and you will get your selling cost. This is important. All this is important for one purpose, is that we want to find out what is the gross profit that we are getting, right? So there we go. That's it for the theory side. I've taken enough time to properly and calmly cover again the theory so that the module doesn't look confusing. There's nothing new, no new concept that we are introducing here. It is basically the same thing we've been doing. Nothing new, nothing to be shocked about. All right, so, but again, we are always looking towards your written exam. That's what is important. So practically, because we want you to be not theoretical only, we want you to be practical in the way as a student of entrepreneurship, you will need to know these concepts and understand this concept fairly well. So that's it. Example 1. Let's go in. So we are looking at Taibo Limited, which uses a job order costing system that's provided to you. The following information relates to job 1, and you will see that quite often in this chapter. And if you see in your exam, they're referring to a specific job and they're putting a number to identify that job, then you know you are dealing with job costing, because they're telling you the first job, job one, I suppose that will be the primary job, whatever it is, but there is a job, and so we are zooming on the job. So job one undertaken in August. There is a timeline that was done in August. The manufacturing overhead are applied to jobs at a rate of 50% of direct labor cost. So we understand that the direct labor cost is the basis, right? The direct labor cost is the basis, right, on which they are applying. And it is only 50%. So when we're looking at this direct labor, as you can see, 30,000 rand. So we understand that 50% of that is 15,000. So that 15,000 refers to your overhead, right? So as you can see here, applied factory overhead is 15% of the direct labor. Why? Because they use direct labor as the basis on which they allocated the overhead. So very important to understand what they are using for that particular company or department or production department. What is the basis they're using? It could only be one of those. It could be the material cost basis, the unit of production. It could be the machine hour basis, the direct labor hours, or the direct labor cost. So in our example, they were using the direct labor cost, and that's why there is a percentage. They were using the cost, right? So, and I hope that you can see it's fairly straightforward, and basically that will give you the cost, because they were asking you one thing, is the total cost of job one. Then this is the way it could be calculated. We will take the direct material plus the direct labor plus the overhead, and we will get our total. So the cost of the completed job would be 85,000 in this example. Let's go to question one, right? So let's delve straight into question one. This question summarizes whatever we've been talking about with regards to application basis, cost drivers, overhead cost, right? So they provide you a summary of budgeted data for an assembly department of a specific company, right? So you have the manufacturing overhead cost. That should draw your attention already, because that says this is my numerator, because this is my total manufacturing overhead cost. But they also provide you unit of production, direct material cost, direct labor cost, direct labor hours, machine hours. So you have hours, you have cost, and you have units. So everything, all possible scenarios that could be provided to you. And the question is very simple. They want to ask you to calculate the manufacturing overhead application rate under each of the following bases. It does not mean that a company would have all these bases at once. That's not the purpose of this. This is just to say these are the scenarios that you could get. But as you can see next to it, and that's the advantage again of OneNote, is that we can put the solution next to it, and it will show you that you have the application basis, which is unit of production, direct material costs, machine hours, direct labor hours, and direct labor costs, right? So these are all the costs that were, the cost and the units. The units, cost, unit, hours, and cost. Okay, one more time. Units, cost, hours, right? That were provided to you. So like we said, you just take your numerator would be the overhead cost. All the time, your numerator would be the same amount, and now you divide it. If you divide it by the number of unit of production, which is 450,000, right, you will get 2 rand per unit. So that's your overhead rate, or your overhead absorption rate, as we say, because this is important. This will allow you to determine how these costs are being absorbed in your products that are being manufactured or sold, right? Okay, so let's go to work in process. By now you understand this concept very well, but I'm just going to repeat for the sake of everyone. Basic economic principle. You have your input, that are going to go into your production, and the input will be processed into outputs, which is your finished good, right? But we need to apply now accounting concepts to it. And so the actual production or the manufacturing itself is the work in process, because the input enters the production and it's being processed. That's why we call it the work in process, right? So you know very well the difference between work in process and a finished good. But it's quite important to specify that all the work that was to be performed, once all the work that was to be performed has been completed, you are dealing with finished good. If you are dealing, for any doubt that you might have, you must always ask yourself the question, was all the work that was to be performed and completed? Therefore, if it was done, it is a finished good that you are dealing with. If not, it's in the working process, right? So that's what I can give you for the working process. There is also something also to see here, is that the inventory amount. When we want to find out what's the inventory amount, these three things are very important. You have the raw materials, you have the work in process. So we're looking at the raw materials that is available. We're looking, which is inventory anyway. We're looking at the raw material that is in the process of production, which is your work in process. And then we look also at your finished goods. So those will represent your inventory amounts. Okay, but if we want to find out whether we have an over or an under application, it is quite important. I think we did touch on this point before, right? So in the previous chapter, the cost of sales is quite an important account. So for over and under application, we will look at the cost of sales. We will touch on that if we get a chance later on. But so I trust that this is quite clear, right? So when talking about work in process, you always need to take into account whether there was a beginning balance, meaning that we are looking at products that were started in the previous period but were not completed until the end of the period, right? So with regards to the production, the actual production that we are doing, we need always to look at whether there is an opening balance. There is things that came from the previous period. So because we are accumulating, job costing, it's about accumulating these costs from when the product is started until it is completed. And that's where you need to understand the flow. I've been talking about this flow. You need to understand the flow. You will never be confused about these accounts or ledger account, anything accounting, if you are understanding that there must be a flow here, right? So the cost of opening work in process must be added to the cost incurred in the current period in the calculation of the total cost, right? And this is what example 7.2 tells you, basically, is that you have a factory overhead applied to job cost at a rate of 50% of direct labor cost. Again, here they are using the direct labor cost as the basis, right? As the basis for applying the overhead. It's 15%. We did calculate it previously. 15% of the direct labor cost. And they say that job 1 was started in July. Remember, this particular example, the job 1 is being done when? In August. July comes before August. So we are being given a job to look at a job that is taking place in August, but they are giving us information from the prior the information that is prior to this this particular month, the month of August. So they are giving us information of what was started. The job one was started in July actually, but we are sitting in August where it is supposed somehow to be completed, but it started in July. And they say that the total cost on the job was 7,500. So which we understand is our opening balance, right? Which is the work in process opening balance. Very important to remember that. And that we're going to take into account. If you see here, like we did, the applied factory overhead is 15,000, which is half or 50% of the direct labor cost, which was 30,000, right? So which gave us the cost of the job in August, which was 85,000. But we need also to take now the work in process or the opening, which is 7,500, which will give us the cost of completed job of 92,500, right? So I trust that the basics are laid and no doubt for anyone with regard to this. So now let's move to another very important account, which is the finished good, right? Finished good, very important account for you to keep in mind. But before we go there, let's look at example number 3. It's quite a handy example, but now this time there's nothing difficult than for you to understand that instead of one job, they added 2 jobs. And like we said, more than 2, they added 4. So instead of one job, they added 3 on top of that. So which is a total of 4 jobs. But the identifier of these jobs are numbers. So it looked very well. It says job 641, job 642. And this is how you will see in manufacturing company, or you yourself when you become an entrepreneur and wanna be an industrial entrepreneur, you would be dealing with this. So you can see all these jobs, they are here, but work in process balance on July, on 1st of July, right? 1st of July, they tell you this is the company, right? Has provided the following information for the 3rd quarter, and it just runs from July to September, 3 months. July to September, 3 months, the 3rd quarter, right? July to September. And they say that there was an opening balance. For work in process, the balance was these 2. So you need to take them into account. But currently, what are the costs currently? These are the costs currently. They tell you material cost, which is your direct material, labor cost, which is your direct labor, and then there's machine hours. It's quite odd that they provided us machine hours, but it should not be a surprise to you, because you need to know that the 3rd element, the 3 musketeers, as I always say, direct labor, direct material, overhead. So machine hours therefore would be speaking to your overhead, right? And the next line tells you that factory overhead are applied to job based on machine hours. So we understand now, this is the basis, right? The budgeted manufacturing. So the next thing that you need to expect is what the total. They provide you that total. The total of budgeted manufacturing overhead is 800,000. Whilst, okay, the next thing you will ask is, okay, what is the total now of the machine hours? The budgeted machine hours of the same period is 50,000. So I understand I would take the 800,000 divided by 50,000, which will give me 16 rand per machine hour. So that's very important, 15 rand per machine hours. Then it would make sense that these machine hours right now that are currently incurred, if I can put it that way, these hours that are actually being used into the production process, I will multiply them by 16. That's how you get this total. So I understand that for job 641, I will take the opening balance. All right, if I want to find the total quickly in my head, I will take the opening balance plus direct material, direct labor, and the 320 for machine hours, that cost, I will take them and sum it up. So here is the place where you need to go straight away. You will see that that's exactly what is being done. Whatever has an opening balance as you can see, for the two first jobs, 641 and 642, there's an opening balance. And then in addition to that, there is the current period cost. All the current period costs are aligned together for all the other jobs, and there's a total that we get, which will be the total for that specific job. So 4,400 is the total cost for job 641, as we understand. All right, but now something that is quite important, we were talking about finished goods. Now, finished goods, they now tell us, if you look at another line, they say, where it says nota bene, NB, it says jobs 641, 50 units, 642, 100 units, and job 643, 1,000 units were completed. So this is very important information. This is a very important line for you to look at. This is very important information, and this tells you that the jobs that were completed are only 3 of them, because the 4th job was not completed. And when you look at the table in your answer here, you will see that on the table there it says completed, completed, completed. I've added actually the unit that were completed, and for the 4th job it is incompleted. So when we're calculating the cost of finished goods, we're only going to take for the jobs that were completed. All right, so we're only going to take to calculate the cost of finished goods as well as work in process. For the finished goods, we're only going to take for the jobs that are completed, and the 4th job, as you can see, the 5,000, it is work in process because it was not completed. And we say that since no unit of job 644 were reported completed, it is safe to assume that it is still in process. All right, so I trust that's quite clear. Right, so one other element here. So we are now going to move straight for the sales of finished goods, right? This is important because we said we need to calculate the sales. If you do remember, why do we calculate the sales? Is because we need to see whether we have a profit. And as you can see here, there it is. Sales minus cost of sales must give you the cost, the gross profit. All right, must give you the gross profit. So for the same example that we were talking about, we want to deal with the sales, right? When product are sold to customers as a whole job, usually the selling price is determined by adding a percentage markup on the cost of the job. It is true. So that's why we were talking about the markup. And if you look at job 642, it's not the same for all product, but job 642, 95 units were sold for 35 rand per unit. That's very important. So we can get actually the sales amount. The sales amount will be 95 units multiplied by 35, which will give us 3,325. Straight here. As I'm highlighting, I'm trying to highlight for job 642. But something is fishier. It should tell you 95 units, but how many were completed? 100 units were completed. So if we need to look at the actual cost, for 100 units, we will take the total of the cost for 100 units, which was 2,750. We will now need to take that cost per unit. We will take 250 divided by 100, which gives us per unit. What is the cost per unit? We're going to multiply that by 95 because out of 100 that were completed, only 95 were sold. So this is important so that we can understand the cost for those 95. The cost is 2,612. And as you can see here, that cost is put there. So you have the total of the sales. The sales were 3,325 minus the 2,612, which will give you the gross profit. All right, so, but as to job 641, they did not provide you a rand amount, they provided you a markup of 50%. So what you're going to do is that your cost, look at job 641, which is the first job. The total cost was 4,400. They say that there is a markup of 50%. So you're going to multiply it by 1.5 or 150%, right? 1.5 to obtain the sales. To obtain the sales, which will be 6,600. So 6,600 it will be your sales minus 4,400, which was your cost. It will give you a gross profit of 2,200, right? 2,200. You can figure out the rest. It is the same process, basically. All right. This is quite important, and please go through these examples. The answers are next to them. There is nothing that you can stand and say, well, I don't really understand. But what I'm saying is that if there is anything that you do not understand, please reach out to me. Reach out straight to me in case that there is something in particular that you are not understanding. But go through these examples. But for question 7.2, the basis for predetermining the overhead is machine hours here, right? So always this should be the first thing that you're looking with curiosity. What is the basis for determining the overhead? So yeah, they give it to you straight. It's machine hours. So we will take the budgeted overhead divided by the machine hours to get the rand amount per machine hour, which is 5 rand per machine hour, right? So in this example, for example, in this example, there is different doctors: Dr. Pillay, Dr. Green, Dr. Ndlovu, and all of them actually, we can say they are put into a sort of production, right? We need to look at the actual machine hours for us to determine the overhead. So for Dr. Pillay, it's 2,200 machine hours, which will be multiplied by our absorption rate, overhead absorption rate, which will give us a total. So the total of all these is the overhead that was applied. So if they give us an actual overhead, so in this example, they gave us an actual overhead. They said the actual overhead incurred in August is 35,000. Remember, we were dealing with things that we budgeted. There is a difference between something that we budgeted and something that actually happened. And that's why we do these calculations of applied versus actual. So we did apply 28,000 in total. If you look at these 3 doctors, we calculate the total of overhead. We did apply 28,785. But what we need to look at is what is the actual. So if the actual is greater, so there was an under absorption. If the actual is lesser, there was an over absorption or an over application. All right. So this is the meaning of this, is that we take the 35, which is the actual, minus the 28, so we can see that what we were applying is not really what actually happened, and it is less. So there was an under application. Why would you want to do this? Why would you want to know this? It's so that you make sure that you are very precise in how you're planning your production. Okay, so if you are under applying, you will make sure that next time you apply a little bit more so that you can meet the actual. All right, so this is quite important. All right, but the main question here that should be looked at was the cost of goods sold and the value of closing inventory are as follow. Remember again, that's what we want to look: direct material use, direct labor cost, manufacturing overhead. Everything is taken into account here, and this will give us the normal cost of goods sold. But now I want to ask you the question: why only Dr. Pillay? Why only Dr. Pillay? We have a normal cost of goods sold, and for the 2 others, Dr. Green and Dr. Ndlovu, the value of ending inventory is provided. Why is that? It is given in your question. Always look properly at your question, because what you need to ask yourself is what was really completed. All right, so at the end of August, the job of Dr. Pillay was completed and invoiced. That makes sense. All right, the jobs of Dr. Green and Dr. Dover were completed, but not yet invoiced. That's the difference between the two. So what was completed is the normal cost of goods sold, because it was completed, it was invoiced, it was sold. So we separate that. That's a normal cost of goods sold. But for the rest, we are looking at the value of ending inventory. Remember, the inventory, we needed to have the three musketeers there in order to assist us for the inventory. All right, so this will be also fun, but I would like to quickly go on to, so in order for me to finish the first part of this recording on Learning Unit 7, I need to touch on the job cost sheet. You will have something like this. Never to panic, because you might see so many things written and say, oh my God, this is going to be a nightmare. I don't know how am I going to complete this. Please don't do that, because that's not fair. It's just something that we're putting for you to be able to look at, because companies will have things like this. So you need to be familiar with something like this. And actually, it's not difficult to fill out something like this. If they were to ask you how to fill out something like this, it's not that difficult, right? So question number 4, for example, will touch on this, right? Question number 4 touches on this. So let's go into it. There are many things inside. What you need to understand is this is nothing that is complicated. First thing is like, what basis? Always ask yourself the question, what basis? What is the basis for the allocation of the overhead? Because you as a student, that's the first thing you want to find out. And you can see here straight away, they're saying it was the direct labor hours. Okay, so that was the direct labor hours. The direct labor hours was the basis for them allocating this overhead. Right, cool. I just want to find out what is the total. But they say, listen, we have 2 departments. You say, makes perfect sense. Then what are the department for the production? Is assembling and polishing. You say, fine. But I still need to find out what's the manufacturing overhead. Okay, they give it to you. 54,000 for assembling. Okay, and 82,000 for polishing. Okay, cool. What is the direct labor hours? They provide it to you. Fine. Then that's already easy for me to calculate the rate, the absorption rate. I take the 54,000 divided by 13,500, which will give me 4 rents. So I understand there's 4 rents per direct labor hour, 4 rent, and 5 rents, 5.5 rent direct labor hour for polishing. 2 different departments, 2 different rates. Needs to know that, right? But this will couple with what? As you know, it must couple with remember that this was budgeted, but it must couple itself with the actual hours. Where are the actual hours? You are talking about direct labor. So you need to go to direct labor to see what assembling, how many hours did it take for assembling for this job, for this specific job, and how many hours for polishing did it take for this specific job. Okay? And that's very important. Just that 2748, remember you are calculating something. 2748, this is your overhead. In green, I've put it in green to show it's different. In green, it is your overhead. Not the same as the direct labor. Remember, direct material, the 3 musketeers, direct material, direct labor, overhead. Okay? So direct material, 45 kilogram times 24 gives you 1,080 rands. That is your direct labor. Direct material, sorry. For the direct labor, you do have 27 hours multiplied by 5.25 per hour. That is for direct. That's not indirect. That's not overhead. 48 hours multiplied by this rate of 6.9 per hour. The 6.9 rand is a rate for direct labor, not indirect labor. But now if we want to find for the overhead, since we are using the basis of direct labor, we will take the 27 and 48. For assembling, 27 multiplied by the absorption rate for assembling, which is 4 rand, gives us 108. And the 48 for polishing, 48 hours for polishing, we will multiply it by 5.5 rand absorption rate for polishing. Two separate things, right? So you get all the totals. All this, if you add them up, so direct labor, direct material, direct labor, here are your direct labor, the two of them, 4 and 5, and 1 and 2, I suppose 1 and 2, this for, as you can see there, for your green there, this is your overhead. So if you assemble everything together, you will get your total cost. So this is your total cost. Why am I saying this is just me thinking quickly, what is the solution to this? And that's what I would like you to be able to do. You need to know what you are talking about. So you mustn't be like, okay, I'm confused. What are you confused about? You need to calculate direct material, direct labor, overhead, which will provide you the total cost. Plus, they provided you information on the sales. They says that the sales, there's probably a 20% markup. That's the reason why I multiply by 1.2. 1.2 is 120. Markup is above 100. Markup is above 100. So if they give you a 20% markup, you take 100 plus 20%, it's 120. 120 divided by 100, 100% is 120 divided by 100, gives you 1.2. All of you know this. I'm just repeating for that specific student who might be struggling, right? So that will provide us the total sales. And once we have the total sales, we can minus the total cost, we can get the gross profit. So basically that was the reason why they provided you this particular job order cost sheet. So everything that we've done now, we're now going to fill it here. How are we going to fill it? Easy. You just look at who's the customer. It's Kiki Limited, right? Whatever information on the dates is already provided to you. Here it is provided to you. They provide you all the information. So you fill out all the information. But the reality is you're not gonna be asked to do this in the exam. But in life, just understand that direct material as an entrepreneur, you can't graduate without understanding this. We're not going to let you go without you understanding this. So direct material, it was 45 kg direct material. Can I confirm that? Yes, it was. Look at the direct material here. Direct material 45 kg. So we'll put it there. But 45 kg, what was the total? Is 180 because we multiply it by 24 rand. That was given to us. These are given. Direct labor, it was 27 hours for direct labor, but this is 27 hours for the department of assembling. For the department of polishing, it's 48 hours. We put the rate on the labor as it is to obtain the direct labor, but that's not going to be the same rate for factory overhead. Because of the factory overhead, we will take the same hours for the labor, but we're going to multiply it by the absorption rate that we calculated for both the assembling and the polishing department. Okay, so all these, we will total them. So 1, 2, 1, 2, 1, 2. We add this amount for assembling, for the direct labor and polishing. We add this amount for factory overhead for assembling and polishing. We add them together. I've put them there. 1, 2, 3, 4. All these amounts, they come here. So you can see the selling price, we have it. because it was given to it was a markup of 20%. We did calculate it here, which was the 2,300, right? That's the selling price less the cost. The cost is the addition of direct material, direct labor, and factory overhead. Easy. And what was the gross profit? It's exactly what we calculated with our own hand here quickly. And that's an example, ladies and gentlemen, of the job overhead cost sheet. That's an example of it, right? So I will need to take a break before starting with the ledgers. So part 2 of this learning unit will just focus on the ledgers, and that will be the end of this learning unit.